the ETF access now accelerates people's ability to buy Bitcoin. And I know that they're not, all of the trading of Bitcoin, but they're, a significant part of it. And so I'm of the opinion that I don't think you'll see the wild downs. I don't think you'll see as wild ups. But I think the 4 years might be skewed a bit now.
Peter, how are you doing?
Very well, thank you very much. Jordan, how are you?
Yeah, very good. It's good to have you on. It's the first time you've been on as well.
I was waiting for the call.
I was waiting for a big announcement from you, and here it is.
I'm trying.
Yeah, it's good to have you on. Yeah, because we've been connected ever since the conference that we put on.
A few years ago, yeah.
Yeah, it was a long time ago. And yeah, we've both just been fighting our own fights and
beavering away.
Beavering away, exactly. Yeah, and then let's go with your announcement first. So Jacobi recently received approval from the Guernsey regulator to open your Bitcoin ETF to retail investors in Europe. I need to emphasize.
Well, in eligible jurisdictions. So it's not specifically Europe. Like if the country you live in allows it, then you should be able to buy it. So, that was probably the narrative that came over, because our Bitcoin ETF has been listed on Euronext Amsterdam since August 2023, and we've never been able to sell to retail. So initially, when we had the fund approved back in 2021, the Guernsey regulator, to be fair, we were fairly surprised they said yes. But back in 2021, Bitcoin was a very, very different beast to it is today, especially to a regulator. Maybe not as much to a Bitcoiner, but especially to a regulator. And so they were very, very nervous. But I think Guernsey, all these offshore jurisdictions, they try and push the boundaries. They try and, be innovative. But Jersey and Guernsey have got really, really strict regulatory regimes. And that's why they're, permanently on the G20 approved whitelist for regulators. So it's not like, a dodgy offshore jurisdiction with a lax regulator. They're really highly well regulated, but they do innovate and they allow innovation from the island within. And so they approved our Bitcoin ETF in October 2021. And usually when you have a product approved, you would usually have it listed and approved in the same country. So the same regulator says, yes, you're approved, right, off you go. So as you saw in America, the SEC approves everything. So the next day they're all listed. So that wasn't the case for us, because we had to go somewhere a bit more off-piste to try and actually speak to a regulator who would actually listen to you. And Guernsey was a great place for us to do that. But then you're never going to list it in Guernsey. So then the next challenge was to find, where do you actually list this product that's a meaningful listing venue? So we would love to have done it in London, but it's not as open as you might hope. So we ended up finding ourselves in Amsterdam because the Dutch regulator was cool with it. And then FTX crashed. And so we basically had a year to sit on our hands and do nothing really, because it would have been commercially suicidal, I think, to have listed at that point. But anyway, so when we did list it, it was only open to institutional professional investors, because that's the regulatory guidelines that we were following. And so we've been, beavering away with a regulator for a while now, and trying to get them to open up, because we see Bitcoin as a mainstream asset. I'm sure everybody listening to this probably does as well. And if you look at what's happened in America with the ETFs, the American administration, incredibly Bitcoin friendly, it really has got past the point of no going back, right? So it used to be the case, it's either going to go to 1 million or zero. Well, a million's far more in play than zero now. So I think as the regulator, we kind of convinced them that it is a mainstream asset class, and preventing somebody buying a Bitcoin ETF doesn't prevent them buying a Bitcoin. So you might as well try and get them down a more secure, safe, regulated route if that's right for them. Unfortunately, they agreed eventually. And so I was in Amsterdam earlier this week, announcing it at Money 2020 on the briefing stage, which was great for us, because Money 2020 is not a crypto conference; it's a fairly big money full stop conference. So for them to invite us to share our news on that stage was awesome.
Yeah, I saw the picture of you up there.
It was a big stage. And where it was the press briefing stage, all the press lounges next door to it. So they kind of go in there, they get little coffees. They don't really venture down into the seats right in the front. So they're all dotted around like the higher tables on the side and the press bit. And there's only a few people in the seats. So I was sat up there as if I was on there, like Jose Mourinho on a big press.
That's what I was going to say. It's like you just signed for a club.
Yeah, it really felt like it. But unfortunately, because the way they sit, like nobody's just like sat front row. So there's just a few rows of like nobody in the seats, but all the press then sort of in the background around it and the higher tables. But to be fair, just go back to the regulator. The Deputy Director General of the regulator, who's like second in command of the Guernsey Financial Services Commission, came with me. And initially, we were when Money 2020 said, "Do you think you could get the regulators to come with you?" I thought absolutely no chance. And they were like, "Okay, we can talk about that." And I was amazed at how receptive they were. And anyway, so Gillian Browning came with me, and she was happily sat in one of the little side tables, was happy to take questions from anyone from a regulatory perspective about how they've moved forward in this. And I thought, what an incredible U-turn. And so I don't think Guernsey have just, bowled over our request and said, okay, then. They've actually made a full-on U-turn that they want to now be a crypto-friendly but well-regulated jurisdiction. And I think they were going to put a press release out today or yesterday about their stance on cryptocurrencies. But, fair play to them. Not just okay, we'll say yes, so you leave us alone. It's a full U-turn. They see it as a mainstream asset class. They want to drive innovation. They want to do it in a well-regulated way. And so they're now much more forward-thinking than they were a few weeks back.
Wow, that's just so strange. Yeah, it's so strange for me to hear. Like when I've tried to interact with the FCA and tried to have discussions and living in the UK, to then hear that that's what another regulator is doing, and happy to take questions as well.
I was amazed that they wanted to come with it, but they're not even. So there's other places that are even more unbelievable. So I was on a panel yesterday at Hedge Week, the digital asset event, and there's a guy there, and he runs a crypto hedge fund in Dubai, and he gets invited in by the regulator to give them advice. And I was like, what? Imagine, just imagine, if the FCA rang me up, I'm assuming it's a scam first and foremost.
Yeah.
I'm expecting there's some trouble. And that's the sort of relationship which isn't very collaborative. And I think what we need in this country is regulators, politicians, to listen to industry experts and say, okay, well, let's work together to make this the best place in the world to do this. And I feel like, and I'm sure you probably feel the same, that I don't think that happens in this country. And fortunately, that's happened in Guernsey. And I mean, in fact, I'm going over there to meet with them to talk through Bitcoin in entirety. Tell them what we see around the world as good products, tell them what we see around the world as bad products, and try and help them build a framework as to what we should be doing or what Guernsey should be doing as a regulator to allow crypto innovation or Bitcoin innovation, but in a well-regulated and almost like grown-up product way, not just throwing any old meme coin crap at the wall and seeing what sticks like other jurisdictions do. What is going to be a good product for 20 years? Not what's a flash in the pan. What can we have and build a long-lasting digital asset administration hub, because we've got the best long-term focused products in our jurisdiction. And I think that's great for me, because we set Jacobi up to specifically create a sensible way for Bitcoin, traditional investment products to buy Bitcoin or the underlying asset of Bitcoin. And we didn't want to do like a dodgy fund. We didn't want to do another crypto note like all the other European providers, because if that issuer goes down, then you're in all sorts of trouble probably. So we wanted to do like the most transparent, probably the most boring, most vanilla way possible of accessing the underlying investment of Bitcoin, but in a product that's probably going to be around in 20 years' time still. It's not just trying to make money on it right now. This is what we see as the future, and this is the way we believe most people can adopt it. And from my background in wealth management and financial planning, if you're not investing somebody's money for 20 years, well, you're not doing it right. You got to look at somebody's entire investment life and what they need to achieve from their financial planning in order to then say, well, this is what I would do to give you the life you want. And that isn't what am I going to do this year to make money next year? Because if you want to try and invest money to make money next year, we probably shouldn't really do anything, because anything can happen and it'll go down. But if you're investing for the medium to long term, then you need a good product and you need a good underlying asset. And we think a Bitcoin ETF is as good as it gets, really.
So how's yours? Because I know there is a difference, but how is yours? Can you just explain it briefly? Yours different to say because I know BlackRock launched an ETN not that long ago.
That's right. So an exchange traded fund. So let's just go a step back. So there's a term ETP, which you'll hear time and time and time again. And an ETP is a categorization of exchange traded products. It's like saying cars, right? Within the category of cars, you've got loads of different cars. Within the category of ETPs, you've got 3 different products. An exchange traded fund. Now, a fund is an equity. So you would buy shares in the fund. You directly own those shares, and that fund directly owns the Bitcoin. So you have, not your keys, not your coin is the most common phrase. But if the asset you're using can't access actual Bitcoin, at least we would say own shares in the fund that owns the Bitcoin. So you own the Bitcoin just with a layer of the fund in between, which you own, right? So we don't own it. We don't touch it. We've got no control over it. We don't do anything to that Bitcoin. It's completely independent of us as a promoter. So if we all disappeared or we went insolvent, well, it's irrelevant to you pretty much because we don't touch the Bitcoin. You own shares in a fund. We don't own shares in the fund. Well, I personally do because I invest in my Bitcoin ETF. But that fund owns the Bitcoin. It's not on our balance sheet. If you have an exchange traded note, well, that's a debt security. So it's not yours. You don't own the shares. You don't own the Bitcoin. You're reliant on the issuer's balance sheet and them having the Bitcoin in the event of an insolvency issue. Or, let's say there's a run on it. Let's say they don't have the Bitcoin that they say they've got and everyone wants to redeem. Well, how do they make sure that they can get you your money back? And that's the difference. So if you look at the rest of the world, in no other circumstance other than within the EU market or the European market, does anybody, as a first product idea, launch a Bitcoin exchange traded note? Nowhere in the world. So if you look at the Americans, Australia, Hong Kong, Brazil, Canada, all ETFs. So the issue in the European market is it's not very easy to create a single asset ETF, and you can't have crypto in it. So under the UCITS regime, which is traditionally the EU and the European ETF standard, normally an ETF would be issued out of Luxembourg or Ireland. You'd have to have at least 10 assets in it. You can't have any specific, overly exposed asset within it. So it has to be a diverse spread. So that's generally what exchange traded funds are within the European market. So we had to work out how do we create a single asset Bitcoin one, but then still get that listed on an exchange inside the European market. And the way we did it was go to the Guernsey regulator, who doesn't have to, outside the EU, doesn't have to subscribe to the regulations that others do. So they can say, okay, well, you can have a single asset fund that can have the underlying asset of Bitcoin. And then we then went and got in touch with the Dutch regulator, who agreed we could then list it in the Netherlands. So we then managed to work out how to get a single asset fund approved and then listed inside the EU. So that's how we're the only Bitcoin ETF, because we're a fund structure trading on an exchange. It's not a UCITS ETF because it's never going to be, never will be. They're probably never going to be. The UCITS rules, meaning you can have a single asset Bitcoin product, because the European market isn't really that way inclined. But that's the reason we've got the only fund structure. Everything else within the European market is a note. It's much more well known to try and do something like what they've done with a commodity. So gold, for instance, similar situation. There's gold exchange traded notes and commodities. They're pretty well known. Like there's iShares have got a massive one in Europe. So it's not like it's an out there product. It's, well, nobody, bothered to think about, can we make a fund structure out of this first and foremost? And it's quite a bit easier and quicker, I think, and it's easier to distribute an exchange traded note around the European market than it is an outside of the box ETF.
Okay, that makes so much more sense. I didn't realize what was it? You had to have over 10.
Within a UCITS ETF, you have to have a spread of assets. So an ETF, in essence, was created to diversify a portfolio. So that's why they're generally not single asset ETFs in the European market anyway, is because you would buy a basket of something, saving you having to go and buy, let's say, for instance, you wanted to pick 10 of the FTSE 100 stocks, right? You would then have to rebalance them yourself. You'd have to pick them yourself. And so an ETF was created to create you a basket to give you exposure to a benchmark almost, and you don't have to do anything about it. So that's why they were created in a way that's trying giving you exposure to multiple things at the same time without you having to really do an awful lot about it. So single asset ones generally don't really exist within the European market anyway, because that's not what they were first designed for in the European market. But Bitcoin wasn't around then.
Yeah.
So I think the Bitcoin single asset, makes sense to have, because that's probably an easier way for people to access Bitcoin if they're not so crypto native, tech savvy inclined investors. Which, from my experience as a financial advisor and wealth manager for the last 16 years, people generally have got no idea. They trust the advisor puts them first, and therefore they go and often do what they're doing. They look at risk profiles, they look at the capacity for somebody's loss, they look at the timeline of how long they're going to invest for, what do they need out of this. But they then generally don't then go and look under the bonnet of what's actually inside these funds and what's inside these products. So I think that's why there's a big gap there's a huge gap in advice in this country. But people generally don't really care that much, from my experience. They've got their own stuff to do with, they've got their own job to do with, they've got their own family to do with, they've got their own house to do with, they've got all these things in life that you've got to do. To then go and learn loads and loads and loads about Bitcoin, as well as 95% of people won't bother. And so that's why a simple product, I'd say it again, it's the most vanilla, boring way to access the underlying asset of Bitcoin is via a fund where somebody else goes and does all the hurdle jumping for you. And they just say, okay, here you go, click, tick on this box here on your trading platform. I want to buy that one. There you go. Don't have to think about anything else.
So then how big of a step for you then is it that this is now available to retail investors, because it's only been restricted to institutional investors prior? So then obviously now you, in jurisdictions that you can get access to this, financial advisors can actually say, here's a product.
Yeah, so we need to delve more deeply into the countries and what they say. So getting it approved or getting the restriction removed was step one. Step two is, well, what countries are ripe for this? And therefore, what we would have to then go and do is go and register to market and sell in those particular countries under a sort of a registration process. And then, so that's the phase we're at now. Like, what countries shall we go and hit up to try and maximize this? And then what you would do is you'd have to understand the rules from advice in that particular jurisdiction. And then you'd have to come up with your plan of action of how you go and do it.
Okay. Yeah, it's not as simple as...
It's not a slam dunk. It's open. All the advisors, they get into it. No, there's so much more to it than that, unfortunately. And if you think of the European market, how many countries are there? How many regulators are there? How many differing opinions between the regulators are there? So it isn't quite as, let's say you're in America or in a really, really big country with loads and loads of people, but with one regulator. You've got regulatory sort of harmony across the whole country. And, let's say in America, like 300 million people can just pile in on the same set of rules. But if you look at the European market, we've got the FCA, you've got the German regulator, you've got the Swiss regulator, you've got the French, you've got the Dutch. You have to jump through all of their individual sort of hoops. So it's much more fragmented than a bigger market with one regulator. So it's not quite as easy as saying, right, we've got that done. We can all sail off into the sunset now. There's still an awful lot of hard work and navigation to do to allow ensuring that the platforms that can provide it to investors actually do. Because a lot of the platforms we were speaking to before, although they had demand from their investors, because they had retail investors on their platform, there's a blanket ban on it. So even if a professional investor was on their platform and he wanted to buy it or she wanted to buy it, they still wouldn't be allowed to list it because then retail would have exposure to it. So there's still quite a lot of mechanics and plumbing to make sure we're on top of, to ensure that the people who are able to buy it from the countries that are able to allow investors to do so have actual access to it. So that's the next big job, really, making sure we're on everyone's platforms that are allowed.
Yeah. What I'm going to take you back a little bit now, because I'm like, this is a lot of regulatory hurdles that you need to go through, and I imagine you've gone through over the last 4 years, and it seems like there's still going to be
no grey hair before. This beard was pure rat, like beautiful beforehand, all grey now.
That's fine. Well, I had hair before I got into Bitcoin.
Yeah. If it's not the Bitcoin ruining your hair, it's the regulators, right?
Yeah, like take me back just to the start. So one of my questions is Jacoby. Where did that name come from? And then
That's a great question.
and then secondly, I'm excited for the answer. And then secondly is, did you expect this process to be as regulatory, as many hurdles, let's just say?
So there used to be this lady always stood outside my office in the city, always smoking with a little sausage dog. And she and I became friends because he's a cute dog, and she seemed to always be outside with this dog. Anyway, we became friends, and she was the sort of office manager for a fintech business next door to us. And with our wealth management business, one of the things that we could have done for you is help you work out, how do you do a company pension? How do you advise all the people within your company? And so it was put on her desk to get this sorted out for their company. She said, could you help me with it? So I said, yeah, that's sort of our bread and butter. So that's no problem. I'll help you with that. And then, so everyone in that company by default became our client. And my Jacoby co-founder worked there. And so he said to me after I did a lot of wealth management planning stuff with him, do you want to start a crypto fund? And I'd never started a fund before. I like the idea of Bitcoin and crypto, but I wasn't that, I didn't immerse myself in it that much. I knew about it, but I wasn't like a Bitcoiner at that point in time. And I thought, that sounds fun. Let's go for it. And then she said, this would never have happened without the dog. And the dog is called Jacoby. So the company genuinely named after a sausage dog.
Oh, that's amazing.
Did I expect to get, when we started this, so he texted me, my co-founder texted me end of 2020. Do you want to do this? I was like, we'll give it a crack. And then the first working day of 2021, we had a call with a friend of mine who knew much more about fund structuring than I did. The second working day of 2021, we had a call with a guy who at the time was the Guernsey Investment and Fund Association chairman, and he's a fund structuring guru. And there were no Bitcoin ETFs in the world at this time. And so we had a conversation about, could we create a Bitcoin fund, do you think? And I don't think at this point in time we quite expected, because it took ages. You have to go to the regulator. Well, you come up with questions you think the regulator is going to ask you. You answer them. Then you go to the regulator. You say, I think you're going to ask me these questions. Here's the answers to them. They come up with loads more questions. And eventually what they say is they give you permission to incorporate a company. And at that point, you think, okay, they're probably going to take it seriously because they're not going to tell me to incorporate a company when they know they're going to say no to something. So this usually, for a traditional fund, you could probably do it in 6 weeks. For us, it was, 10 months. And so it was a really, really long, drawn-out process. And I don't really think, at the very, very beginning, did we think we were going to list Europe's first Bitcoin ETF? No. It just evolved into that because the more we thought about it, the more that was the natural place for it to go to. And so we knew we wanted to create a safe, secure environment for people who weren't like crypto investors to be able to access it via their traditional financial products like SIPs and ISAs, etc. So that was the goal, to try and create access for people that had their money stored in products that are financial planning products that are tax efficient already. But how can that access Bitcoin? So we wanted to create a bridge between the two. And it just ended up that a Bitcoin ETF is the most natural way to do that because it's very easily tradable. It's very transparent. People get it. People know about ETFs. And it was an easy way for somebody who isn't, as I said earlier, a tech-savvy Bitcoin native investor to access it via their existing infrastructure that they already have. So yeah, named after a dog. Didn't think it would end up quite like it did. But he's still alive and kicking, is Jacoby.
Oh, is he? Oh, that was my next question.
Yeah, he's good. He's got a little sister called Juno, and I think he's got his own Instagram page, Jacobi has. I think the two of them are crossing now. I don't follow.
So Juno's your next company, yeah.
Maybe we'll find another dog in the street. Don't know. See what happens.
That's amazing.
Well, a lot of people call it. So a lot of people call it Jacoby or whatever, and I'm like, I know it's Jacoby because I know the dog.
That's so good. I'm glad I asked that now. I didn't know if it was just going to be like just a random or
Yeah.
like a boring answer, but it's really interesting.
A mathematician called Jacoby as well. And so a lot of people think it was linked to that, but no, it's just a dog. It's a good dog, but it is a dog.
Yeah, it's interesting hearing people how they named their company or how they got to those names, because there's always like a story behind it, which is what I love.
Yeah, and there's a really good one actually. There's a like a hedge fundy digital asset networking group a friend of mine runs, and it's called AYU. I was like, why is it called AYU? And he said when he first started it, he didn't have a name for it, so AYU stood for as yet unknown, and he just kept it.
I like that. It's like I just recorded with
really
a guy called I just recorded with a guy called Eves, and you'll probably know him. He owns a asset management company in France called Tobam. Asked him what does it mean, and then it's think outside the box, asset management.
Yeah, brilliant. Yeah, I saw him speak at an event in Paris recently, and he is absolutely brilliant. And he's done a really, really good paper on how to value and measure Bitcoin treasury companies. And he's involved with the blockchain group, the guys that have launched the Bitcoin treasury company in Paris, and they're doing incredibly well.
Yeah, massive. Yeah, because they're backed by Adam Back as well, and
Adam's investing in all of them.
Yeah, he's going everywhere. What's your actually? While we're on this topic, before we switch to, I'm going to go UK focus, but yeah, what's your thoughts on all the Bitcoin treasury companies, because they seem to be everywhere at the moment?
Yeah, I get asked like every 2 weeks if I would help with one in the UK. So
no, same. I've got 3 requests to be an advisor on the table.
Yeah,
it's
I think this. I think it's amazing, and I think it's if you can financially engineer it to make sure you're fine in the downturn, then I think it's going to be a huge craze, and I think it's going to do really well. I think some people will do it without understanding it deeply, and I think they'll come unstuck. I think the big boys have all got the same people involved in all of them. So fortunately, I invested in Nakamoto. So I am involved in the one with like Bitcoin Inc. with David Bailey at the helm of it, raised 710 million in 3 weeks. And if you look at who's involved in that, they're the people that are involved in all of the successful ones around the world. So they've kind of already got the playbook. And I think if you look at, there's a few different ways in which people do it successfully, because Michael Saylor does it in a different way to Metaplanet. Metaplanet does it in a different way to the blockchain group. But if you look at who's actually involved in these companies, it's all the same people. So I think if you can get involved with those people that have, they've got various ways in which to do it. They've got the team of people dotted around the world that are doing it incredibly successfully. They are by a country mile the experts in this, and if they can create a way of doing it that can withstand, the traditional Bitcoin downturns, I think it's got legs. To be honest, I think if you look at the last 10 years, the biggest stocks were the Mag 7. I think if these guys do it right, the next 10 years, I think the biggest growing stocks will be the Bitcoin treasury companies. And as long as I said, if they can manage downturns and not collapse, that's the key to me. If you risk management, because we know the potential upside of Bitcoin. We know if you just sit and hold Bitcoin, what's going to happen. If you over leverage Bitcoin, then you could come unstuck because of the downturn. So that's the key for me. If you can manage the risk management properly, you could probably do amazing things.
Yeah, that's exactly what I've been saying. Is like, especially looking at like having the right team in place and the right strategy, like it's so important to have that execution or the strategy and then execute on that strategy and just not deviate from it. Because
you forget about what you think your instincts should do, and you just have your plan, don't deviate. And I think that's the key. That discipline is the key, I think. And I think the other thing is if you can try and accumulate as fast as possible, like the Smarter Web company, you know, their line is like whoosh. And I think if you can accumulate as quickly as you can to catch up with your market value, just think there's such a demand for Bitcoin, but people seem to have. And I was having a chat with I don't know if you've ever come across Richard Byworth. He's absolutely brilliant. I was having a chat with him in Vegas last week, and we were saying like back in the day, if you'd returned your clients 15% a year, they'd be over the moon. We've become numb to the fact that that was normal and that was good. If you now don't do 100% a year and you're in Bitcoin, you're like, oh, what a crap year. And that's become normal. And so I think it's like a gateway. Bitcoin's like a gateway drug, right? So if 100% a year becomes normal, well, what more can I now do? And the Bitcoin Treasury companies and MicroStrategy's returns and Metaplanet returns, they're that next drug for people. And so I think that is a blessing and a curse, because people just sort of assume it's going to go great. And, you know, a lot of the times you can invest in something when it's going really well, and turns out you invested at the top and it comes crashing back down. And so I think if you can carefully manage the risk, make sure everybody that gets involved understands this could come down 60% at the drop of a hat, but you're investing for a 5-year period, I think they could be the most phenomenal performing things for the next decade.
Yeah, I agree. Like if they're engineered right and the right team and everything, then speaking of that, what do you think of so the downturns we've mentioned, and I know Saifedean also has mentioned this around the treasury companies, but do you think that we will still see somewhat of a 4-year cycle, or do you think that's kind of changed? And it's tricky. And
I think the demand. So let's just go back a step, right? Typically, a disruptive technology is usually invented by like the CIA or somebody from Silicon Valley or something like that. Then it's adopted by governments, then big corporations, then eventually that technology weeds its way down to retail investors. Well, Bitcoin was the other way around. It was the computer scientists, it was like the freedom fighters, the libertarians. Then it was the early adopters, or the really, really, really early adopters. Then it was people that were like, actually, I completely get it now. I buy into that. But only now, 16 years in, is it companies, countries, governments. And those are the guys with the bigger tickets. So where previously you've seen the wild ups and downs, that was when there was less big ticket demand coming in, I think, because it was generally just people or funds or, you know, whales in the end. But if you were a country and you're thinking, right, we do want some Bitcoin for a Bitcoin treasury, what price should we buy at? You probably wouldn't be diving in at the top. You'd probably be setting orders to buy at, say, I don't know, 10 or 15% below the market price. So in the event it would then have some sort of crash, there's quite a barrier of people ready to buy at that level for the price to maybe just bounce back off of. So I think the additional huge scale demand from, you know, countries and companies and the corporate treasury companies, I think they might change the course of the downturn because their purchase power is going to be vast. And so I don't know how it changes it. I don't know why the ETFs are another thing, don't they? So the ETF access now accelerates people's ability to buy Bitcoin. And I know that they're not, you know, all of the trading of Bitcoin, but they're, you know, a significant part of it. And so I'm of the opinion that I don't think you'll see the wild downs. I don't think you'll see as wild ups. But I think the 4 years might be skewed a bit now because of the access and the size of the people getting involved. Because real people, like the regular people, will carry on buying because they already were buying before. They'll carry on. New retail will start to buy because they'll start to adopt. But also, you'll have the companies and the countries and, you know, sovereign wealth funds and the ETFs also buying. So I just think the demand is going to grow exponentially. The supply, well, we know about the supply. There's only 5% of the Bitcoin left to be mined anyway. There's nowhere near enough being mined to satisfy the demand. The amount of Bitcoin on exchanges getting heavily depleted. So I'm just not sure the pattern continues as it was.
such a tricky one to know, because it does.
If I knew,
Yeah.
I'm a platinum paid, but I'm just not sure. I think the best advice I would have is just get some more. Don't do anything when it goes down. If it does go down, get some more. Invest for the long term. If you're investing for a 20-year period, which, from my track record as a wealth manager, I would always say to people that if you're not willing to buy something for 5 years, don't buy it.
Yeah, 100%. Like, you have to go into Bitcoin and with that mindset. But
otherwise you lose. And did you see back in February when there was that flash crash? I saw some really, really interesting data on Glassnode, and I think it was James Van Straten that did it and then shared it. And it showed you the ages of the Bitcoin wallets that sold and that didn't sell. And it was so telling that crash was absolute newbies crapping themselves and selling, because wallets that were older than a year old or had held Bitcoin for over a year, nobody sold. Like, literally nobody sold. It was everybody under a year. So inexperienced, probably their first serious dip. They've probably seen, a nice rise from when Trump won the election, thinking everything was rosy, risk off, everything's going to go to the moon. And the first sign of trouble, they jump ship. And unfortunately, a lot of them would probably have jumped ship at a loss. And that's the issue. If you get into this without expecting the downturns to happen, you're in the wrong place.
And that goes for just investing in general. And I think that's a lack of investing knowledge.
Yeah, people hope that their investments are going to go up and up and up, but they do go up and up and up if you zoom out. So generally, something bad happens all the time. It always shocks the market recovers, something else happens. And there's a really good chart I was sent by a wealth manager friend of mine who's a wealth manager in Dubai, and they call it the wall of worry. And it shows you the global equity index since, I don't know, like 1950. And it shows you every bad thing that ever happened, the dip and the recovery. Then something bad happens, a recovery. Something else bad, a recovery. And so if you're investing for the long term, short-term dips don't really matter to you unless you need that money right now. And if you need the money right now, you should never have invested it to begin with. So the only way to long-term grow your assets and outstrip, inflation, all the sort of increases you need, is to just sit back and do nothing. And I think one of the most successful fund managers, Terry Smith, the manager of Fundsmith, they even published 3 rules. Only buy good stuff, don't overpay for it, do nothing. A genuine documented rule is do nothing.
I love
and
that.
That is what real investors know how to do. And that's what novices and uneducated investors don't know. They can't handle the emotion of it, so therefore they jump ship and they lose. And then they get scarred, so they don't go back into it.
There's
is the hardest thing to do in investing. The hardest thing to do is nothing, which is sounds like Mickey Flanagan's dream, isn't it? Like proper nothing.
Just go at.
Do absolutely nothing. Stare at the ceiling.
Yeah, it's a thing that a lot of people, can't do. Turning our attention to the UK a little bit is, I saw someone put, I think it was on X or LinkedIn or something, that because we can't get access to any Bitcoin ETFs or products, that our regulator is then putting more risk on us in the UK, because we are then, a lot of people, I'm saying people in the UK are then looking for exposure elsewhere, and that comes with more risk. For example, strategy is a big one that has been over the last 5 years, that people have got large exposures to, taken on more risk, but at the same time, they've actually outperformed the asset as well.
Yeah, well, that's a very beneficial byproduct for them of that, isn't it? But yeah, I do think that we had this with the Guernsey regulator, right? So I wrote a paper to the Guernsey, Investment Association, the Guernsey politicians, to say these are the reasons why we believe our ETF should be an option for investors, because there's all these other ways you can buy Bitcoin. And for some people, those avenues are absolutely fine. if you're comfortable self-custodying your Bitcoin, great. If you've done all the planning around it that you need to do and you understand it, great. Most people, from my experience, aren't comfortable with that. So if then a regulator doesn't allow a safe, secure route that people understand, you're either saying don't do it, or you're forcing them down a route which they're less comfortable with. And so there needs to be a balance struck of, okay, we understand people are going to buy this come what may. So we need to help them do it in a fashion that is safe, secure, well-regulated. They understand it. There's risk warnings. There's some sort of education put in place to try and encourage them to, know what to expect. And I think there is a balance that all regulators need to strike to make sure people who are going to do something are going to do it in a way that's the right way for them. And I think that's where maybe the FCA is a little bit behind some other countries in the world at the minute, unfortunately.
Yeah, it's going to be really interesting to see, like, because tying back to what you were talking about is like people don't really have time to learn about this thing, and because
so many other worries in life.
Yeah, and it's such a difficult thing to get your head around and take on. It's kind of like a project of learning about Bitcoin, because then you're having to you're unlearning about the money that you understand today, and learning about investing, and then you've got Bitcoin as well. So it's a lot to actually put on someone's plate, which is, I think, why we have so many people just be like, nah, I'm not going to learn about it.
Absolutely. That's exactly the case. If you think about most of your friends, I reckon, actually, the majority of the people are in a certain age category, right, that could invest in Bitcoin. And those people have got mortgages where the rate's just gone up. They've got a rise of cost of living that's just gone up. They've got kids they need to take to and from school, classes, whatever. They've got a job. They probably want to work from home, but now they have to go into the office. They've got so much already to do. If you look at a typical family, like I've got a 3 and a 5-year-old. If it wasn't for my job being in Bitcoin and wealth management, I don't think I'd have time to learn about it. I don't have time. I mean, I could learn French if I wanted to, but I've not got time for that. So learning about Bitcoin is like learning a whole other, paradigm of life. And so people haven't got time for that. And so that's, people like us need to provide simple education to make it obvious that this, is something that's going to be around for a while, and that it's something that is to the benefit of the world.
Yeah. And that, I love that you just referenced that, because I gave a talk in Madeira that, like, Bitcoin, I think I called it like Bitcoin is a new language or something like that, because it does feel like that you're having to learn a new language.
Yeah. Well, people generally leave school and don't want to have to learn anything ever again, right?
Yeah.
Well, you don't want to do a Bitcoin exam. No one, my nephew's doing his GCSEs at the minute. He doesn't want to do them, let alone leave and learn about something else. So that's the issue you get. People generally don't want to learn about something unless they have to. Typically, I mean, a lot of people do, and that's great. But most people, I'd say, go to work, go home, look after their family, wake up, go to work, go home, look after their family. And that's, that's life.
Yeah, it's important. Family first as well. All right. Well, that's us hit time. Thank you so much for coming on and having this discussion. It's so good to have more UK voices as well. I think it's really important.
Actually, I think I feel that's growing. I was talking to, when I was in Vegas at the Bitcoin conference last week, there was quite a few of us actually, and it was really nice to be around other Brits that are trying to, forge a path and trying to help us as a country move forward. I love the slogan Team GB with a Bitcoin B. We should get some uniforms, like Olympics uniforms, but with Team GB with a Bitcoin B on it.
Yeah, I love that.
Some guy on one of my Twitter posts then got AI to mock Freddie New up in Team GB Olympic kit. It was just brilliant. Freddie hated it, but I loved it.
Was it just a massive built guy?
Yeah, you should try and find it. I don't know where it's in one of the it's one of the comments, but it was brilliant.
I'll go find it. But no, you're right. I was listing out for something, I won't say what, but I was listing out all the Bitcoin voices in the UK, like people that are actually advocating for it, pushing for it, doing like really cool things in the UK. And that list is massive now. But if you asked me that when we were doing the conference in 2022, we were struggling. We were really struggling for UK voices. And like, I think maybe 75% of that conference was international speakers. Because we didn't have the voices, but now we do, and it's it's really good to see.
Yeah, I think there's some there's some brilliant people that have picked the baton up, and they're carrying it now.
Yeah, and you're one of them. So yeah, likewise. And yeah, congrats on getting that over the line with retail as well. And yeah, I'll look forward to seeing more come out from you.
Yeah. Look, I think little by little, we'll get there in the end.
Yeah. Awesome, man. Well, thank you for coming on.
Pleasure. Thank you for having me. Speak to you soon.